Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning. The cues coming out of global markets are fairly mixed, but the GIFT Nifty is above that 21,000 mark. And of course, it's the RBI D-Day today. We will be telling you what the expectations are. And we'll also be taking up all your stock-related queries on the show with our technical experts. So if you have any queries, send them in to us on our YouTube feed and we will try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street snaps a three-day losing streak ahead of November jobs report, but the Nasdaq is on track to post its sixth straight week of gains. Meanwhile, Asian markets trade mixed after downward revision in Japan's Q3 GDP. The GIFT Nifty indicating a higher start for the Indian market. Oil slips for the sixth straight day. Brent continues to trade around $74 a barrel as US output rises and concerns persist over the health of the Chinese economy. It's RBI decision day today. Governor Shaktikanta Das will announce the MPC's rate decision at 10 a.m. Majority of the economists expect no change in rates and largely no change in stance. But growth projections are expected to be revised higher. And among stocks in news today, block deals likely in Zomato as well as FiveStar Business Finance. We'll also be talking about a lot of stocks that will be in focus today, including the likes of LIC. Well, straight to the top story then, RBI will be announcing its interest rate decision in the last policy of the year. What should one be expecting and whether there will be any upward revision in the GDP forecast or not for the current fiscal? Let's bring on board, Latha Venkatesh, Executive Editor of CNBC-TV18 to put things into perspective. Great to have you on the show, Latha ma'am, as always. But tell us this time around, once again, no change expected both in stance as well as rates. But any other thing that one should be really watching out for?
Well, there is this, cut-paste expectation, exactly what they said in October. So business as usual, and it will be a hawkish pause. So they will continue to say that we are not going to rest till inflation meaningfully aligns towards 4%. And we are now at, likely number of 6% both in November and December or very close to that. And therefore, it is that hawkish pause expectation. And as you pointed out, the extent to which growth forecasts or even inflation forecasts for that matter could be revised is what the market will look out for. But I just want to leave one caution on the table. We went with similar expectations in the previous two policies. August, they surprised us with that ICRR, incremental cash reserve ratio, which took away about 1 lakh crore from the market. Yields went up. The October policy, they threatened that they will do OMO sales. They didn't do, but that threat was enough to push yields up on that day and bring the bank nifty down. Between then and now, they've also announced increase in risk weights, a third surprise. Again, bank nifty was impacted. So we do not know whether they have something up their sleeve in terms of hawkishness or in terms of dovishness.
But, as you mentioned, risk weights were increased for consumer loans, right? Do you think that's just the beginning of a series of steps that the RBI can take? Anything that could come as a very big negative surprise?
No, I don't think there'll be very big negative surprises for sure. It's just how do they approach growth? Only with respect to your specific question on risk weights, I don't think they'll raise risk weights on the same items now because you don't even have a month of data.
Yeah.
You will wait for, I think, one results or a couple of months before you want to, increase it from 125% to 150% of, risk weight. But they could do something on microfinance because they already warned that rates have been usurious. So that possibility does exist, but that impacts a very small number of stocks and certainly doesn't do anything to the bond yields. The point is if they do a CRR hike. Now, you can say growth is too fast. 7.6 is not a normal Indian growth. When you run faster than your capacity, that your body allows, you will fall. And therefore, I'm going to rein you in stock. They could do that. Or they could take, the other view and see this is a one-quarter phenomenon. The second half is going to be an average of less than 6%. So the average for the year is fine. It's at 6.5 or 6.6. So they may do nothing about it. That's why, because of the last two times, the market guessing it wrong in terms of any action of tightness. That they will be tight, everyone agreed. But they actually acted. So will they do a CRR hike? Could be a small fear.
But do you think the street would have factored in,
no
that
way.
would come as a very big negative surprise?
The street has only factored in a hawkish pause. No action is expected. So and CRR definitely not. But if something like that comes, yes, then there is a bit of a hiccup.
Right. So we'll be, of course, watching out for that, and I'll, of course, touch base with you at 11 a.m. after the policy announcements to take, cognizance of what you are taking away from.
I
the
think
policy.
the best will come after the policy, after the press conference, because in the
So
policy,
what exactly would you be watching out for in the press conference?
The risk
Liquidity.
weights.
Okay, risk. Okay.
The risk weights. Why did they do it? Will they do more? Are they satisfied with the impact of the risk weight so far?
Okay.
That would be a very key question. And whether growth. Nobody will come and say, I don't like high growth. But actually, when there is higher than normal growth, whether it is Powell or Mr. Shaktikanta Das, there is a fear that the economy is running excesses somewhere. We want to see whether they exhibit any such fears.
All right. Well, with that, Latha, thanks a lot for taking out time and joining in. Of course, I will touch base with you later in the day. I'll leave you, because you have to go to the RBI headquarters as well.
Sure.
But with that, let me also bring on board a technical expert for today. Joining me is Raja Venkatraman, who's the co-founder of Neotrader. Great to have you on the show, Raja. Yesterday we saw some bit of profit booking kick in, and today we have the RBI policy as well. Do you expect more caution when it comes to the index, and what are the immediate levels that you'll be watching out for today at least?
Yeah, good morning, Nandita. So the way we are right now positioning ourselves, we are clearly aware that the markets have given a very strong run-up, and this was clearly beyond everyone's expectation. But yes, this is what happens in the market when all of us are expecting a mild reaction, we get a stronger one, and when we are expecting a stronger one, we get a mild reaction. So right now, all of us are expecting a pause in the overall momentum. But what I do feel is that yes, RBI policy, bond yields, etc., everything is now taking a back seat when it comes to the kind of scenario which is being shown by the recent election results. So the recent election results are clearly dominating all these factors. So bond yields, RBI policy, we have been discussing for so many weeks right now. But right now, what we have to consider is what is the most important news flow that is currently in play, and that is the election results. And I'm very certain that there may be a brief blip, but I don't see much reaction coming through, and I would continue to expect that the upward trajectory will extend. And the levels which I'm looking at in Nifty is towards 21,500. And if there is a dip, yes, possibilities of dip is certainly something which we cannot rule out. But if the dip occurs around 20,600, 20,700 would be a good area to buy into Nifty. Now, when you talk about Bank Nifty has been showing a lot of promise, and I expect the run towards 48,500. Bank Nifty has never performed, and it has clearly given a breakout right now over the last few days. And I see that Bank Nifty, which was in the shadows for quite a long while, is going to take the center stage, and that is going to ensure that the momentum in Nifty does not die down. So all those who are looking for a shorting opportunity, which most of the people are having a view that yes, market has risen quite a bit, we should now look at some shorting possibility. I would say that you have to shelve those thoughts at the moment and look at every dip as a buying possibility. This is what I have been discussing on the shows time and again, and I continue to echo that fact, and I'm sure that in the coming days we will continue to see more upward traction. So that's what is my view here. 48,500 on the upside, downside on the Bank Nifty, look at supports at 46,000. In Nifty, look at 20,600 to 700 as a support area, and upward trajectory towards 21,500 in the next few days.
All right, that's the view then on the Nifty as well as Bank Nifty. Since we're talking about banks, I want to get your thoughts on an ICICI Bank and HDFC Bank, given the fact that they've just about started participating in the upmove, right? Because till now the upmove that we have seen, Bank Nifty and private banks specifically have underperformed. This morning we have a report from Macquarie on banks, and they are cautioning, when it comes to the loan growth, they expect a slowdown and margin pressure for banks going forward. In fact, they also expect moderation in the unsecured and NBFC segment going forward. Of course, we saw what happened with Paytm yesterday. They have, they've decided to cut their exposure to low-ticket loans of sub 50,000 rupees or thereabouts. We saw 20% kind of downtick yesterday itself, Raja. First your thoughts on banks like ICICI Bank and HDFC Bank, and then fintechs like Paytm, who've already seen a 20% kind of a downtick. For particularly, Paytm, do you expect more downside given the fact that a 20% kind of a move came in yesterday?
Yeah. So first, let us take up the private banking space itself. So we are noticing that between the private and the PSU, we are noticing the private banks taking a lead up here. And amongst the private banking space, ICICI Bank, HDFC Bank, there is Axis Bank and the IndusInd Bank. Compared to the ICICI Bank and HDFC Bank, I find that the setup and the promising outlook which Axis Bank and IndusInd Bank is offering seems to be much more, fruitful. So overall, the momentum is positive, and the trends are continuing to show some positive traction here. Yes, there could be certain news flows here and there, but then when you are going to participate in the private banking space, the ranking which I will put is first is Axis Bank, then ICICI Bank, then IndusInd Bank, and then HDFC Bank. So these are the four banks which I'm tracking, and I'm sure that when Bank Nifty is going to move, private banking space would be the space to participate in.
All right, private banking looks like the space to participate in. Aside of that, we are again going to talk about a Zomato, Raja. I know we discussed this talk quite a lot, but then it's in the news today. There's likely to be a block deal in the counter. SoftBank likely to sell 1.1% stake. Particularly for today, what are the kind of levels you'll be watching out for? Because there will be a supply of fresh shares hitting the markets, right? So, do you expect some bit of a hiccup today? What are the kind of levels on the lower side that you'll be watching out for?
Yeah. So if you recall, we had spoken about Zomato at the start of World Cup. We discussed it a couple of times during the World Cup season itself. I had projected a target of towards 120, and that's where it has stalled at the moment. And if you see over the last 5 weeks, 120 is the level which it has been unable to cross. So I definitely expect a supply coming here. So look for lower levels to buy into. The lower levels will be in the region of around 105 to 107. So that will be a lower level to buy into. Look at those levels to buy, because overall the momentum seems to have picked up. There is some positive traction emerging here. So Zomato is definitely on the buy list right now.
All right, that's the view on Zomato. The other one that is likely to see a block deal is FiveStar Business Finance. Matrix Partners may sell somewhere around 6% stake via a block deal, and the issue price is at 730 rupees per share, which is of course at a discount to the current price of 756 or thereabouts. In the last 5 sessions, the stock hasn't really done much. It has been sideways, so to say. Would you expect the stock to test 700 levels, in the next few sessions?
See, the way every company is moving right now, so there are some subjective reactions that are coming into play. But what we need to consider is that when you're talking about a financial space, there are a lot of ifs and buts which are happening here. So right now, the overall momentum of FiveStar Business continues to retain to the upside. So I believe that the upward trajectory beyond 800 would attract more buying interest. Till then, it would continue to remain in a sideways phase.
All right, expect more sideways movement on a FiveStar Business Finance. But I also want to get your thoughts on the sugar pack. Of course, there was negative news flow to which the stocks have already been reacting. Sugar stocks down, for the last couple of sessions. Yesterday, we had news flow that the government has asked some of these sugar companies to stop ethanol production and focus on sugar production. Now, this has come as a setback. So we've already seen, as I said, sugar stocks reacting to it. But how should one approach this pocket now?
Yeah, like the oil minister has mentioned that the ethanol blending project which India is participating in, and also India launched the Global Fuel Alliance in the G20 summit. So the Indian government's projection and its commitment towards the alternative fuel is very much on the cards. And after yesterday's reaction, there were also a lot of rumors which I am just mentioning that about a clarification of that particular stance. So what I do believe is that these reactions which emerge were basically out of the news flow, and now you may see a subsequent recovery from here, because the overall objective, the government continues to maintain that yes, though it has met the target for this year, the higher targets of 20% ethanol blending by 2025 is very much on the cards. So I don't think that this should be considered as a exit clause from the sugar counters. In fact, this dip should be used to buy into, because I definitely expect that we can expect a recovery in the sugar stocks in the coming session. So those who are holding these stocks at the moment should consider any chances of a recovery emerging, or any signs of recovery emerging, should start participating once again.
All right, let's get down to some more queries then that are trickling in this morning. Meet Jaitley wants to know your thoughts on LIC. He wants to know whether one should add more or hold. LIC, has seen a very smart comeback thanks to the rally that we've seen in the Adani group of stocks. The stock hit a fresh 52-week high yesterday. Would you advise investors to add more, or do you think hold on, perhaps look for dips to buy more at this juncture?
So LIC has given a fantastic move. All the PSU stock insurers have done really well, and the kind of momentum which we are seeing here clearly identifies that yes, the possibility of heading upward is very much on the cards. But then what one has to realize is a move from 600 levels to 800 levels within a span of 1 month is a phenomenal move. And now if you're going to buy here, you should also have enough capital to add on dips. Otherwise, you will tend to believe that you have entered at a higher level and you will choose to exit. So my advice would be buy on dips. The dip level would be towards the region of 740. A dip will definitely occur, because the kind of move which has emerged, it has not been a very sedate move or a tapered move. It has been a very it has been an upthrust. So whenever you see an upthrust, the possibility of a reaction is very much there. So use the reaction to buy into. Overall momentum is positive, and upward trajectory, the stock can double by the end of next year. So if you're looking at a long-term perspective, then this stock is definitely worth a buy.
All right, buy LIC with a long-term perspective. The next query is on Tata Power. This one is coming in from Vijay Patel, wants to know your thoughts. Of course, Tata Power hit a fresh record high yesterday, becoming the 6th Tata Group firm to cross the 1 lakh crore rupee market cap mark. Do you think one should wait for dips here as well, or do you think ride the momentum?
Yes, Nandita. Right now, in all the stocks, you're having the Diwali firecrackers bursting a little late. But then what's happening is that if you're going to buy when it's reaching a sky-high limit, then like I mentioned earlier, you should have some capital to add at lower levels as well. So yes, Tata Power is getting the benefit of the Tata demerging its technology and the EV setup, etc. All those impact is now, the EV impact is coming through. So what one needs to do is look at lower levels. Here again, I will say the same clause. Look at lower levels to buy into. If you have additional capital, you can buy at current levels. But the dip would be in the region of around 300. That would be a very good dip area to get into the stock.
All right, consider buying Tata Power on dips. That's the view. Hope that answers your query. The next one is coming in on a Concor. Now, this was the top F&O gainer yesterday, perched at 52-week highs as well. We have a query coming in from Prajay. He wants to know your thoughts. Should one hold on to it if they have it already, or time to book a little bit of profit?
Yeah, definitely. Concor has come out of a very large gestation period, and it's been stretching for more than 2 years. So this clearly says that yes, the containers and the logistic scenario has improved, and overall development in the economy could help this stock move further. And the kind of projection which I am seeing here from the momentum which we saw yesterday clearly says that it could head towards 1400 by the end of the next quarter. So we just say next 3 months, by March, you can see a target towards 1400. So definitely hold on to this stock. If those who have not got into this, look at 800 levels to buy into.
All right, that's the view on Concor. I hope that answers your query. But we also have a query on an Allcargo Logistics coming in from Peter William. He wants to know if it's a good time to invest. Allcargo, I think it has been fairly, hasn't done much in the last 1 month as well. And if you look at the 6-month charts, it has given negative returns. So vis-a-vis, a Concor, do you think Allcargo, is something that one can avoid and perhaps look at Concor instead?
Yeah, see, the current market scenario is favoring the ones who are in alignment with the trend. And right now, there is no signs of anything emerging in all cargo. So, if you would like to take a bet on the sector play and participate in ones that are moving, then Concor would be a better bet rather than all cargo. So, I would like to stick with something that is moving rather than trying to buy something which will move at a later date. So I do not want to invest my money in that fashion. So that's the premise which I have.
Right, that's the view on Allcargo. Hope that answers your query. The specialty chemical segment has, finally started firing a bit. The likes of alkyl amines have seen a good up move. Last to last session, we saw a very good 10% kind of up move coming in there. So Raja Sachin wants to understand how should one approach some of these stocks, alkyl amines, Balaji amines. Would you say this is the start of an upward trend going forward?
See, right now the specialty chemicals were so beaten down that we are witnessing a revival here. But still, the specialty chemical sector still has to undergo some more consolidation here. So I would suggest that there are a lot of other sectors that are coming to play. You're having the defense that continues to push the government's agenda. You got the power sector, you got the paper sector, you got the PSU insurance sector. So wait for dips to buy into stocks from these area than the specialty chemicals. Specialty chemicals, I still believe, are more of a trading play and not for an investor play.
All right, that's the view on specialty chemicals, more of a trading play. Aside of that, Bajaj Finance, what's the view here? Manish wants to know how to approach this stock. Raja hasn't really been able to make a comeback, this particular stock.
Yeah, see, Bajaj Finance has definitely shown a lot of courage, and Bajaj Finance has shown that yes, it can be an outperformer. But then, like all big mutual fund houses, everyone continues to believe that yes, Bajaj Finance has a story, but then it has been caught in a time warp. And what I'm seeing is that the consolidation phase from Bajaj Finance is not going to go away soon. So investing a huge amount in Bajaj, you'll need a huge amount to invest in Bajaj Finance. So unless you are a fund house with capital, I would say that you can skip Bajaj Finance.
Right, time to skip Bajaj Finance, at least at the current juncture. The last query for the day, really, Raja, this is coming in from Yagnesh, wants to know your thoughts on a TCS after the closure of its buyback. He wants to know whether we can expect a dip towards 3,000 rupees on this particular stock.
See, at the current juncture, the way that stock is performing, I don't think that we could expect a move here. Yes, TCS definitely tries to conjure up some momentum. But then what I feel, and I've continued to echo this fact, is that the mid-tier IT companies are better performers. So if you are looking to participate in the IT space, do look at the mid-tier IT companies because that will give you a better bang for the buck. Like I've been mentioning Coforge, LTTS. LTTS, if you see, it has gone up by 6% in the last 3 days. LTTS, LTIM, Coforge, Emphasis. So these are some names, Tech Mahindra. So if you would like to go into IT space, go for this. TCS, Infosys, Wipro, yes, they will show a brief upside. But then what I continue to believe is that the other names which I mentioned, the first set of names, the mid-tier IT companies, they are the ones who will give you some return and not these.
All right, that's the view then on TCS. But with that, we've come to the end of this query segment. Raja, before I let you go, what would you be recommending for our viewers this morning?
Yeah. Yes, the first stock which I would recommend is a buy in Exide Industry with a buy at current levels with a stop at 293 for a target towards 305 and 309. And in the big ones IT space, compared to TCS, I find a good setup emerging in Infosys. So Infosys can be taken as a trading play. So I'm recommending a buy in Infosys with a stop at 1460 for an upward traction towards 1499, 1515.
All right, those are the recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining in and addressing all of your queries and sharing your recommendations as well.
Thank you.
With that, we've come to the end of this edition of Morning Trade. But just a reminder for viewers that, Money Control will be bringing you live coverage of the RBI's monetary policy decision. So tune in live at 10 a.m. when the RBI governor announces the rate decision, and post that, we'll get you a post-policy analysis with a battery of guests. So don't forget to tune in for that. But it's a goodbye from me for now. But stay tuned to Money Control, because coming up next is Open Bell.